Hello and welcome back to the Geordie Pig Investor channel, where we dive deep into the world of dividend investing to help you build a portfolio that pays you. Whether you're just starting out or looking to maximize your passive income, this channel is your go-to resource for strategies, insights, and the tools you need to grow your wealth steadily over time. Hit that subscribe button and join me as we explore how to make your money work for you, one dividend at a time. In today's video, I'll be breaking down my InvestEngine portfolio performance for the past month, what went up, what went down, and any changes I've made, and my thoughts going forward. Whether you're a long-term investor or just getting started with InvestEngine, this should give you some insight into how a diversified portfolio behaves over time. I created this portfolio to show you all that you don't need to have millions to start investing, and by putting away some amounts each month will be very beneficial over the long term. My portfolio is split between two different accounts in here, my general investing account, which you can see on screen right now, and also my ISA account. The reason it is split is because before last year you could only hold one ISA account, which was over on my main portfolio on Trading 212, but since then they have allowed you to open up as many ISA accounts as you want, the only caveat being that you can't exceed your £20,000 yearly limit. So since this came into play from April 2024, I've been investing £100 every single month into my InvestEngine portfolio, and that is going to be exactly the same as today. We're going to add this £100 live with you all. I'll show you exactly how to invest on an InvestEngine account, show you how simple it is, and do it all with you today. Eventually, I will move the money across from my general investing account into my ISA account, but for right now there's no rush to do so, and I will just look to do that in the future when I'm not maxing out my £20,000 limit, so that I can take advantage of then moving this money across. My portfolio is quite unique, as every single ETF in the portfolio is a factor ETF. A factor ETF is a type of exchange-traded fund that targets specific characteristics or that has been linked to the better investment return or lower risk over time. Some common factors include value, so this would be stocks that are cheap relative to earnings or assets; growth, which is companies growing faster than average; momentum, these are stocks that have performed well recently; quality, which is companies with strong balance sheets and profits; and finally, low volatility, which is stocks that tend to fluctuate less in price. So instead of tracking a broad market index, a factor ETF aims to give you exposure to a certain strategy or style of investing that suits you best. I feel in this portfolio I'm showing you today, I have a good blend of factors I personally want to be exposed to. Anyways, let's actually jump into how these different factors performed for the month. So last month was surprisingly a decent month considering all the noise around what's been happening between the US and Iran. There were a lot of people telling me I need to sell all of my holdings because the market was going to have the biggest crash in history. Well, I'm still waiting for this to happen, and even if that did happen, I just see it as an opportunity to buy into my different ETFs at a cheaper price. But as you can see on screen, we were up 1.7% in the month of June, or £24.79. The best performer in my portfolio was actually the S&P Small Cap 600, stock ticker ISP6. This ETF is an exchange-traded fund that aims to replicate the performance of the S&P Small Cap 600 Index. This index comprises 600 small-cap US companies, providing investors with exposure to this segment of the US equity market. We can see on screen that it was actually up 3.54% in the month of June, and I really like this holding in my portfolio as it gives exposure to stocks I wouldn't otherwise have. If I scroll down, we can see that the top three holdings within this one is number one with BlackRock Liquidity at 1.4%. And then we have Mr. Cooper Group at 0.7% and Brinker International at 0.6%. And in the sector breakdown, we can see the top sector is currently industrial at 29.5%, followed by financial at 13.1%, and then property at 7.4%. If you're interested in this particular ETF, just be aware of the inherent volatility and liquidity characteristics of small cap stocks, as they can be more unpredictable and less liquid than larger company shares. As with any investment, it's essential to assess how this ETF would align with your own personal individual investment objectives and risk tolerance. I have this one as a 15% allocation in my portfolio, and I really don't mind when the ETF is in the red, or any ETF in my portfolio is in the red, because that means that I can still buy in and bring my average cost down for that particular ETF. The next best performer in the month of June was the XTrackers MSCI World Momentum ETF, stock ticker XDEM. This is an exchange-traded fund designed to replicate the performance of the MSCI World Momentum Index. This index focuses on global large and mid-cap companies exhibiting strong momentum characteristics. You can see that this ETF is up close to 2% in the last month, and if we scroll down and have a look at the top holdings, right now the number one holding within this ETF is Broadcom at 4%. You then have Netflix at 3.7% and Berkshire Hathaway at 3.5%. It has 27.5% in financials, 19% in technology, and 18.4% in industrials. If you're interested in XDEM, then you should consider its focus on momentum investing, which targets stocks with strong recent performance trends. As with any investment, remember it's so important to make sure that it aligns with your own personal goals. And let's now have a look at the next best performer for the month of June. It was none other than the UBS Factor MSCI USA Quality ESG ETF, stock ticker UC99. This one saw close to a 2% gain in the month of June, and it is an exchange-traded fund designed to provide investors with exposure to US companies that exhibit high quality characteristics and adhere to environmental, social, and governance criteria. The fund aims to replicate the performance of the MSCI USA Quality ESG Low Carbon Select Index, which focuses on US companies demonstrating strong quality traits and robust ESG practices. If we scroll down and have a look at the top three holdings in this one, we can see Nvidia takes the top spot at 8.7%, followed by Microsoft at 8.4%, and then you have Apple at 7.7%. And on the sector breakdown, it has 36% in industrials, 28.5% in technology, and 8.6% in financials. I have this ETF as my biggest allocation due to its very strong performance since inception. The fund has achieved an average annualized rate of return of 18.09% including dividends, which means it's outperformed the S&P 500 since inception. The next stock that performed best for me in the month was none other than XTrackers MSCI World ETF, stock ticker XDEQ. This is an exchange-traded fund designed to replicate the performance of the MSCI World Sector Neutral Quality Index. This index focuses on large and mid-cap companies from developed markets worldwide that exhibit high-quality characteristics such as high return on equity, stable year-over-year earnings growth, and low financial leverage. You can see that this stock was actually up 1.46% in the month of June, and the top three holdings within this one are also Microsoft at 5.1%, Nvidia at 5.3%, and Apple at 4.7%. You can see that a few of my ETFs do have some overlap, but I'm very comfortable with this as I do quite like the overlap when it is in quality stocks like the ones we can see on screen right now. If we have a look at the sector breakdown, we can see that industrials at 20.9%, technology at 19.6%, and then we have financials at 18.3%. If you're interested in XDEQ, you should consider its focus on high quality companies across developed markets, its sector and geographical diversification, and its accumulating dividend policy. As with any investment, it's essential to assess how the ETF would align with your individual investment objectives and risk tolerance. The final ETF we are going to look at in today's video is my GGRG position, also known as the Wisdom Tree Global Quality Dividend Growth ETF. This one is a 25% allocation in the portfolio and saw a just over 1% gain in the month of June, meaning every stock was in the green again, as they were all in the green in the month of May. So that's now 2 months in a row where every single ETF in my portfolio has seen a positive return. This index focuses on dividend-paying companies in developed markets that exhibit strong growth characteristics and high-quality fundamentals. The top three holdings within this one are AbbVie at 2.6%, Apple at 3.2%, and then you have Microsoft at 5.7%. This fund actually offers different exposure across the world, with North America being at under 58%, and you can see that Europe excluding UK actually holds 22.5% of this ETF, alongside Japan at 5.6% and the UK at 4.8%. That is one of the reasons I really like having this ETF in my portfolio, as it gives me more global exposure. If we have a look at the sector breakdown as well, we can see that industrials at 22.9%, followed by technology at 19.5%, and then financials at 11.7%. If you like the combination of income and growth potential through exposure to financially sound dividend growing companies across developed markets, then you may find GGRG to be a compelling addition to your own personal portfolio. Overall, I'm really happy with my different holdings within this portfolio and will continue to add to them with the allocations I have them assigned to. So without further ado, let's invest my £100 for the month. It's as simple as clicking on the drop down box, pressing on the amount you want to add, typing it in there, then pressing review order, and what it will do is simply the following day at 2:30 it will invest the money for you. And there we have it. It is as simple as that. That is my £100 added to the portfolio for the month. So remember, by just simply investing any amount you possibly can each month, it is seriously a big deal and will contribute to building your long-term wealth. Investing is not about timing the market, but time in the market. Patience turns small seeds into lasting wealth. That wraps up this month's InvestEngine Portfolio Update. If you found this video helpful, don't forget to give it a thumbs up and subscribe for more monthly updates, dividend news, and investing tips. Got any questions or want to share how your portfolio is doing? Drop a comment below. I love reading all of your comments and replying to all of them. Thanks for watching, and as always, stay consistent, stay patient, and let your money work for you. Until next time, this is the Geordie Pig Investor, over and out.